Welcome to The Explainer. So today we're going to dig into Watsco's latest earnings, and it's a really interesting one. You see, the company missed expectations, sales dropped, and yet the stock barely moved. How does that happen? Well, we're about to unpack the story behind those numbers.
Okay, let's just dive right in. On one hand, the headlines for Watsco's fourth quarter look, well, kind of rocky. They missed on earnings per share, they missed on revenue, and their sales were down almost 10% from the year before. Yikes. But then you look at the other side of the ledger. They jacked up their dividend by 10%, generated a record-breaking $400 million in cash, and get this, they ended the year with zero debt.
So what's the deal here? How can a company whiff on the big headline numbers, but at the same time look so incredibly healthy financially? That's the real question, and honestly, the answer is a fascinating story about how to manage a business through some pretty unprecedented chaos. Yeah, you could say that. The chairman and CEO, Albert Nahmad, called it an adventure. And that might be the understatement of the year. The company, and really the whole HVAC industry, has been on this wild ride, navigating a truly historic period of disruption. To really get what's going on with those Q4 numbers, you have to understand the perfect storm this entire industry has been sailing through. This wasn't just a Watsco problem. This was an industry-wide earthquake. So, the biggest single factor? This thing called the A2L refrigerant transition. Basically, the chemical that makes cold air cold had to be changed everywhere. And this was a massive deal. For the guys who actually install and service these units, it was kind of like the government telling every driver in the country they have to start driving on the other side of the road overnight. It meant all new equipment, brand new inventory, and retraining thousands of people. And, this A2L thing, it was just the latest challenge in a series of huge shakeups. I mean, look at this timeline. Since 2019, it's just been one thing after another. You had COVID disruptions, then insane supply chain chaos, then major new energy efficiency rules. It has been a truly wild ride. This context is absolutely critical for understanding why sales dropped in 2025. See that huge drop for the full year? It looks bad in isolation, right? But it only happened because it followed a massive 20% spike at the end of 2024. Why? Well, contractors rushed out to buy all the old familiar systems before they were gone forever. It's a classic case of pulling forward demand, basically borrowing sales from the future, which creates this artificial boom followed by a totally predictable bust. So, faced with this giant storm, Watsco didn't panic. Instead, they did the opposite. They doubled down on financial discipline. They decided to build a financial fortress, one that could weather any storm that came their way. And this response, it comes from the very core of the company's philosophy. The president, A.J. Nahmad, put it perfectly. Their guiding light, their North Star, is all about the long term. They're just not interested in short-term reactions or quick fixes. First, they ran the entire year completely debt-free. I mean, think about that. They didn't borrow a single dollar on any given day in all of 2025. That gives you incredible flexibility to move and invest, no matter what the market is doing. Second, they focused on turning their inventory into cash. They set a pretty ambitious goal to cut inventory by $500 million, and they nailed it. That move generated a record $400 million in cash from their operations in just the fourth quarter. That's just amazing execution during a chaotic time. And third, they kept their incredible streak alive, 52 straight years of paying a dividend. To keep that promise in a tough year like this one, it just shows you that rewarding their shareholders is baked into their DNA. And here is the absolute key to understanding all of this. Dividends are not paid from quarterly earnings. They're paid from cash flow. And with the company generating something like $16 to $18 per share in cold, hard cash, the board had all the confidence in the world to approve that 10% dividend hike. It's just a massive vote of confidence in the underlying strength of the business. But that financial fortress, it isn't just for hunkering down and playing defense. No. It's the foundation that lets Watsco go on offense. It lets them get aggressive and invest in technology as their number one weapon for growth. A huge part of this strategy is just getting everyone to embrace digital. E-commerce is now more than a third of their total sales. That's $2.5 billion in 2025. And in some of their biggest markets, that number's already topping 60%. And their own apps, the ones they built for contractors, are just exploding.
Their HVAC Pro Plus app, which lets a technician order parts from a roof at 2 a.m., grew its user base by 15%. And On-Call Air, which helps contractors build quotes for homeowners, saw sales made through the platform jump 20% to a staggering $1.8 billion.
So looking forward, they're using all this tech and even AI to get more profitable. They're using data to fine-tune their pricing, they're making a big push to sell more of the higher margin parts and supplies, and they're using AI to make the customer experience better and find totally new ways to grow. Okay, so with the biggest disruptions of the last 5 years finally in the rearview mirror, management is now laser-focused on one word: normalization. It's all about getting back to some kind of normal, predictable, stable way of doing business. And their to-do list for the next year is crystal clear. They want to use that financial strength and their tech advantage to grow sales and steal market share. To make that happen, they're focused on becoming more efficient. They have a goal of 5 inventory turns, which just means selling through their entire stock 5 times a year. And they want to keep pushing their profit margins up toward that long-term goal of over 30%. And that really leaves us with the big question for the year ahead. Watsco has proven, without a doubt, that it can play defense. They built this unbreakable financial foundation during years of total chaos. The question now is, as the dust finally settles, can their tech-first offense turn all that resilience into a brand new era of accelerated growth? That is the story we're all going to be watching.